Looking for some of the more detailed options data that the thinkorswim platform contains? The Trade tab's All Products screen details a statistical breakdown for every optionable security that the thinkorswim platform offers. Let's review how to access and interpret that data. Begin by navigating to the Trade tab. Click the All Products subtab. Enter an optionable underlying in the gray search box located in the upper left corner, and hit the Enter key. Below the option chain, you'll see two sections on this screen, labeled Today's Options Statistics and Options Time and Sales. Let's attempt to tear our eyes from those beautiful chains and minimize them for a moment to dive into more detail. Let's start with the Options Statistics section. Click on the small blue triangle to the left of the words Today's Options Statistics to expand it. This is a helpful hint for the platform in general. Anywhere you see this arrow pointed sideways indicates that more information can be seen by expanding it. So, with this tool open, you'll see 3 columns of data broken down into sections. The first section to the left displays a breakdown of the chosen securities' volatility measurements, of which there are 2 varieties. IV, or implied volatility, is a measure of a security's potential price movement based upon a mathematical derivative of extrinsic value of the security's options. In English, implied volatility is a measure of market sentiment regarding the security's potential movement. HV, or historical volatility, attempts to measure a security's potential price movement based upon the ranges of price movement a security has historically shown. This section of the display gives the 52-week high and low of both of these volatility measures, as well as the percentile of volatility relative to that range. In other words, if the current historical volatility, or implied volatility, is exactly halfway between the 52-week high and low value, its percentage here would be 50%. If it were at the 52-week high for one of these volatilities, it would be 100%, and at the low, 0%. The final value in this section is the VWAP, which stands for Volume Weighted Average Price. VWAP is a measure of the underlying's price based upon the number of shares or contracts traded at different prices. Trades made at a greater volume have a proportionately greater influence than smaller trades in an effort to average the price to the point where the most trading activity has occurred. In the next section, we'll focus on the center of the display for the trade analysis breakdown. This collates the records of all options trades recorded for the current date and breaks them down into useful classifications. The 3 different colored columns represent sums of the rows for calls, puts, and the aggregated total. The first row is the aggregate volume of each of these 3 columns for the current trading day. The second row, traded at bid or below, gives the total number of contracts traded at or below the bid price at the time of their execution. Securities traded at or below their current bid can be reasonably assumed to be sales. Immediately following this line is that value's percentage relative to the total number of calls, puts, or all options traded. For example, the calls traded at bid or below are divided by the total volume to equal the percent of total figure. The next section, traded at ask or above, is exactly the opposite of the last and can be reasonably assumed to be buys. After that is the between the market section, where detailed trades are shown that have occurred between the quoted bid and ask at the time of execution. These could be buys, sales, or legs of spread trades. The bottom portion of this section, called Delta Between, displays collective deltas of all options at the time they were traded, divided into quintiles. To simplify the display, the deltas of both calls and puts are shown as their absolute value, for convenience if you're comparing the delta values in the puts column to the puts section of the option chain. Keep in mind, a negative delta on the chain is equivalent to the positive value on the options statistics page. The third and final section of the options statistics interface lays out the sizzle for you. as you may recall, our classic sizzle index, is a ratio of the current day's volume for all options on the underlying against the average of those options' previous 5 days' volume. So, a security with a sizzle index of 1 is trading at a level average to the past 5 days. A sizzle index of 2 indicates twice the average volume. 0.5 would be half the average, and so forth. This logic works in the same fashion for all of the values in this section. Call and put sizzle indexes measure solely the volumes of that underlying's calls and puts. Volatility sizzle measures the underlying's current volatility index against the average of the past 5 days, and stock sizzle takes that same measurement for trading volume of the underlying itself.